Manishi Raychaudhuri is with us. He's Asian equity strategist, Equity Cash Asia Pacific at BNP Paribas. Manishi, good to have you with us here. Thank you. So, what are the themes that you guys at BNP are working on? We had Harold, who writes the Flying Dutchman column at HSBC earlier with us in the morning, and we were talking about small caps and mid caps, and he was saying, well, large investors that he speaks to are still looking at large caps. I mean, smaller down the market cap, especially the small caps and mid caps, etc., not so much. Is that true in your case at BNP as well? Have you expanded your coverage universe, and what are you really picking up? Go on.
I would tend to agree with that, because large investors who invest very large quantum of money, they would look for liquidity, they would look for size, and that naturally makes them gravitate towards the frontline large cap stocks in most markets. Now, fortunately, over the last 5 to 7 years, that universe of large liquid stocks have considerably expanded in India. If you go back 10 years, possibly at most about 30 to 50 stocks would fit the bill. But today, an average of, let's say, $5 to $10 million of average daily trading volume would pertain to at least about 150 stocks. So that expansion of that universe itself has made the market more attractive. Now, this is, of course, the story in many Asian markets, even in China. But in India, a combination of expansion of the addressable market with significant support from the domestic flows, which makes the market more stable, that has clearly been a very strong tailwind.
Manishi, hi, good morning. How are you feeling about the mid-caps now? Because the rally in the mid-cap index has been steep, but the quality of stocks is a bit questionable at this point in time. Do you think there's a little bit of a euphoria in the mid-cap space that one should be cautious about, or is there more to go on the upside?
Well, I think just like in any category of stocks, not just mid-caps or small caps, one has to be selective. And the investment philosophy should be to try to buy at a reasonable price and at the same time look for growth opportunities and good management quality. If I look at the headline valuations, mid-cap and small caps after this stupendous rally that we have seen, they are trading at par with the large cap valuations, and in some cases even more. So the headline valuations do give us some degree of, lack of comfort about that space. And I would think, therefore, that, possibly the large cap frontline well-researched stocks, where there's a degree of knowledge among the analyst and investor community, they provide a degree of comfort at this point of time, which the relatively unknown mid-caps and small caps may not.
All right. Hi, Manishi. Good morning. What's really done well in this past month or so is IT. You're talking about the Nifty being range-bound. Well, that index itself is up by more than 4%. What's your take on the index? Because there are headwinds up ahead, but it seems one part of the street believes that maybe on data, on software, India is going to continue to outperform, and that's some part where China can't really give us any competition. Your view on the space?
Right. So, you would recall that when I was here on your channel, that was possibly a month ago, and even earlier, I had talked about IT, and we had sounded out that we were actually positive on the sector, despite all the negative data points that had been coming in, particularly around April and May. That was when some of the large cap frontline stocks had given profit warnings. They had talked about slowdown or ramp down in some of their client activity. But we had always held to this point of view that one should be selective in this sector and look for those companies which have a strong deal flow pipeline. And there are quite a few of them. So we actually stick to that point of view. We think that the deal flow in the traditional business, and there are sort of two kinds of deals, where the usual, or the new projects in the Western Hemisphere are possibly going a bit slow right now. But the kind of projects which actually lead to significant cost reduction in, let's say, the banking space or the retail space, they are still very much alive. And that's why we still have IT service stocks in our Asian model portfolio in the India sliver. And we see no reason to get out of those at this point of time.
Right. Got it. Manishi, are you watching the the monsoon situation at all? I mean, will that emerge as a risk to consumption? So the latest data says that the monsoon season, which is from the 1st of June, runs till the end of September. But as of now, from the 1st of June, as of yesterday, all India deficit is 9%. 10% qualifies to be called, over 10% qualifies to be called a drought. Of course, I mean, it's the government's it's other factors as well. It doesn't have to be, but over 10% can be. And August has been extremely severe in some states, the deficiency. Maharashtra, for example, I think deficiency in August was almost 60%. So your thoughts in terms of how that kind of plays into the near to medium term. Go on.
This is undoubtedly a near-term concern, as far as the consumer sector and more specifically food price inflation is concerned. But of course, even this monsoon situation has to be triangulated. As we know that June was a small deficit, July was excess, and August has turned out to be quite a significant deficit all over India. And of course, there is a difference across different regions. As we know that, I think there's a deficit in eastern and western part of India. The silver lining here is that much of the sowing actually happens in July. And there was a significant excess rainfall during that period, which would have also led to groundwater availability being at a relatively comfortable level. Now, having said this, I must point out that this is clearly a significant near-term headwind that we are watching out for. We don't think, even if we do have a degree of food price inflation in the fourth quarter or beyond, it would lead to any significant change in the domestic monetary policy. But it is something that clearly has to be looked at as a near-term headwind to the market.
Okay. I had one question on this, consensus buy trade on the capital goods and the power names, right? We were just having a discussion with the power analyst who said that this thermal space is really booming now. Order wins are coming in thick and fast. So the NTPCs, BHELs of the world, are you bullish here? And from a long-term investor perspective, I mean, it hasn't been great for long-term investors in the past 10 years for these sectors. But now do you think things are going to change?
In general, we are positive on industrials. And we think that, yes, power equipment being an integral part of that would also benefit. But one has to be careful about the receivables of some of these companies. Many of them deal with, government orders in a big way. But if you look at the Indian earnings estimate environment, it has actually increased over the last 1 and 3 months. And one important contributor to that has been the industrial sector. Now, within industrials, there are 2 or 3 areas that we tend to focus on. One, infrastructure, where government infrastructure investments are increasing and shall continue to increase, we believe. Second, defense equipment, and that's clearly one area which has been growing and possibly holds furthermore hope for the future. So this is in a sense what we are trying to focus on. I mean, no doubt industrials are a great space right now. We think there's a private capex cycle likely to ensue maybe 6 months to a year down the line. But again, one has to be selective about focusing on the right segment within industrials and getting the stocks at the right growth-adjusted valuations.
All right, Manishi, thanks so much for stopping by and filling us in with all of those details. Wishing you a good day ahead and looking forward to have a chat with you rather soon.